Is
those sound effects, or is that you?
That's me doing that, yes.
It sounds like Pee Wee Herman.
Mike, technical analysis.
What? What did you just go into?
Yeah, I was doing your technical analysis, the rotation zone.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Recorded August 11th, 2017. It's the Money Path Podcast with Bob Iacchino and Mike Arnold, founders of Path Trading Partners. On today's show, number 84, The What and the Why is sponsored by Motorway. Go to pathtradingpartners.com and download your 14-day free trial. So let's join Bob and Mike for the conversation on news in the markets.
All right. So start it up, Bob. You're in charge this week.
Did you see Travis Kalanick from Uber?
What?
Travis Kalanick is being sued for fraud by one of the biggest names in venture capital, Benchmark Capital. They're suing him for fraud. Kalanick wants to pack Uber's board with loyal allies to clear the path for his eventual return as CEO. If the suit is successful, Kalanick would be kicked off the board, which would keep him from being able to gain significant footing within the company in the future. Uber also yesterday lost its first employee and original CEO, Ryan Graves.
What do you think is going to happen to Uber?
I think they're going to go IPO at a significantly lower valuation than people have put them at in the past. The last estimate I heard for Uber was $100 billion was the possible valuation for an IPO. I think $100 billion. I heard that about a week ago. And I think what will probably be somewhere in the 20 billion range, which is still, ridiculously great. And I don't think the company's going away, but I think it's just going to be a significantly less predatory company. And I think that competition is going to gain a footing. There's already some viable competition in Chicago in Lyft, obviously, and by a company called Via, which is a little bit different. It's true ride sharing. I don't know if you ever used Via before. It's a smallish company. I don't even know how many markets they're in.
I've heard of Via.
So Via is a smallish company, and again, I don't really know how many markets they're in, but they're all black cars, town cars, black SUVs, and essentially what they do is the guys just kind of drive around or they sit, and they're professional limo drivers, the kind you would hire during off times. So like if a guy is sitting in front of the Sears Tower waiting for a pickup he has to do in an hour, he gets a Via alert. He'll take somebody from the Sears Tower to the Board of Trade in a black car, and they pick up extra money like that. And it's also why I say it's true ride sharing is because you're basically mandated to be allowed to pick up other people. Oftentimes when I've taken Via, I've been alone, but they might pick you up and say, all right, we're going to pick somebody up here and pick somebody up here. You're not there. At least as of the last time I used it, there was not an option to ride alone in Via. Although, again, every time I've ever used it, I've been alone, literally every time. So Via is non-demand transit on a mass scale built in Chicago. It's a Chicago company. We are currently operating in New York and Chicago and are rapidly expanding. That's from the website builtinchicago.org.
Driving cars yet?
What?
When are they releasing the self-driving cars?
I don't know. I hope so.
That's what I want. That's what it's all about.
It's all I want, self-driving cars.
See, Via would work for you because you're social. It wouldn't work for anybody like me because I'm antisocial.
I talk to some people.
What is going on with the markets? What's going on with the VIX?
What do you mean? Have you heard about North Korea?
What's going on with North Korea?
Saber rattling. This isn't even close to the Cuban Missile Crisis. I don't know why everybody's getting all upset. This is a country that, by some estimates, has a maximum maybe 6 nuclear weapons. I mean, it's certain annihilation. It's probably not going to happen.
So people are all well. We've had some sell-off in the market too.
Yeah, and I don't know if what I'm trying to figure out now is if this North Korea stuff is a catalyst for a sell-off that was kind of in the making, or is it the simple cause of the sell-off? And that's that. I think right now I'm leaning toward catalyst. That kind of people were looking for reasons to lighten up. A lot of people, a lot of really well-known people, and I don't really have a list in front of me, but a lot of really well-known people have sort of said, you know, trouble's coming. Greenspan said there was a bond bubble. Gunlock said people should be heading for the exits in stocks. So there have been a couple of well-known guys out there. Mohammed El-Arian has kind of warned a little bit, saying that we're really overdone now. We're seriously overdone. But this VIX spike, according to the chart on my iPhone, is the what is it, Mike? The highest one since October or November of last year. The fact is, most of the pre-done research that I've been seeing says that the VIX doesn't necessarily mean revert. It kind of just stays. Like excessive periods of low volatility lead to longer periods of low volatility. That's almost the research I found lately has said. It doesn't really snap back. Although we're getting these snaps more often. Again, referring to the VIX chart on my iPhone, if you compare 2016 to 2017, we didn't have those giant spikes we saw in 2016, like in, what was that, June? And then in August, and then another one in October, November. But we've had more of them. We had one in March, 2 in March, 1 in April, a small one in June, or in May rather, a larger one in June, and now this one. So they've just been happening almost every month to every other month. It might have something to do with the excessive level of the VIX, but I don't know. What do you think, options guy? What's the VIX telling you?
It's just telling me. I wonder how that guy's big position's doing, because it's so
doing good today.
Huh?
It's doing good yesterday and today, right?
Yeah, but he doesn't have, with his October expiration.
Yeah.
He's not going to get the full benefit right now. Yeah. So it'd be interesting to see how I'd have to actually, chart out his whole position and see, because the effects with where the gamma falls right now and everything else. Mm-hmm. So I'm waiting for an update for somebody who actually will do that analysis, because I'm not doing it. But the FANG stocks are certainly starting to get to interesting levels.
Tesla pulled back a little bit, right? Not FANG, but Tesla pulled back a little bit.
Why would you? Well, Tesla.
Anytime you say FANG stocks, my mind immediately goes to Tesla for some reason. I don't know why.
Well, Tesla hit. We talked about that double bottom, right?
Yeah.
It hit its. It hit the stop reduction level a couple days ago. At 360, what was the official high was 370. Our stop reduction level was 369.69.
Wow. So
stop has been raised on Tesla, and now it's pulled back to 356. But that one has not been hit. If you look like Facebook,
Facebook's not a valid double top, right? On the daily,
no,
not for us.
No, but it's sitting right at its bottom of the rotation zone on the daily.
For those of you that don't know what a rotation zone is, we just did part 1 of the rotation zone on our YouTube channel. You can see that. Free of charge, of course.
So Facebook's at the bottom of the rotation zone. What else? What other? Let's see. Netflix, which we'll talk about a little later. That's pulled back to its 50-day exponential moving average. Wow.
What about Apple?
Apple? That's one of the stronger ones still.
Yeah, it bounced back today while Facebook is not quite bouncing back yet.
Apple, I mean,
Apple fill the gap?
no, in order to fill the gap, it would. Now I'm having to expand my chart. In order to fill the gap to the high, would be it'd have to trade down to 150, 399. And it did not. Yesterday, it traded down to 154.63, so it did not fill the gap. It still got the rising rotation zone. It has pulled back. Speaking of that, the U.S. Trade Commission, we talked about this a few weeks ago. Now they're officially looking into Qualcomm's patent fight with Apple. The International Trade, or the ITC, will determine whether or not the iPhone sales should be banned.
I read that. I started laughing. They're going to ban iPhone sales?
Well, if Apple...
Where does Apple go if they ban iPhone sales?
No, Apple, well, guess what? If they start ruling against Apple, Apple's going to settle this really quick.
Right.
Apple's not going to go, fine, we're just not going to sell the iPhone in the U.S.
Yeah, they're going to be like, we have a huge pile of cash in Ireland. How much do you want?
So, but this, let's see, how long should this take? The average investigation takes less than a year and a half. So, I guess in government time, that's pretty quick. So you have still Qualcomm and Apple going at it back and forth about Qualcomm saying that Apple's using some of its technology that violates 6 of its patents, and Apple refuses to pay for it. So they're saying, okay, if you're not going to pay for it, you can't sell any product that uses that technology in the U.S.
Yeah.
And Qualcomm already worked out a deal with some other companies like Amazon, Microsoft, and Alphabet. So, and tying in again, now this is going to revolutionize it. I'm going to want Stafford's feedback on this. In the food and fashion nook section, the rumors the next Apple iWatch will have LTE built in, so you won't have to load your phone everywhere.
Will it be like regressive in terms of the amount of things you can do on it? Obviously, because the screen's so small. Or have I not gotten there yet?
And then you'll probably have to charge it like every 6 hours too. That's one of the big challenges. How does that? I've always wondered that, because people put sleep trackers to look at the quality of sleep on their iWatch. Well, my iWatch has to charge every night. Else, so if I actually wore it to bed, by the time I woke up, it would be dead, and then it'd be useless for part of the next day when I use it.
I don't know. Let me ask that of the people I know that do it. My brother-in-law does that.
Mike, you have a Gen 1, right?
Yeah.
Well, that's why. My Gen 2 goes for 2 days.
Yeah, but still, you can only do it every.
And it does my heart rate every 4 minutes.
Well, mine does my heart rate.
I think the LTE antenna won't need another cellular contract, right? Won't Apple probably use their Apple SIM and then pass that to that other device, and you won't need a separate cell contract for your watch?
They're actually saying you might. I was reading the opposite, that you might.
That would be bad.
But I'm not gonna. I guess I don't know the purpose of putting LTE in, because I always have my phone with me. So I'm not really going anywhere with just a watch. I guess if I'm going for a swim with the Gen 2 watch, which you could swim with, and I'm not going to bring my phone in the pool. So then if I had to respond to a text while I'm doing my laps, I guess
it's for extreme emergencies.
Extreme emergencies?
I think it's very convenient for parents. My sister and my brother-in-law use it all the time because they don't have to have their iPhone on the table. Both of them have their phone like in my sister's purse, but they're kids. They got 3 kids. So they'll feel their wrist vibrate or they'll hear the sound. They'll just look at it and they've got a preview of the text and they know if they have to answer it or not.
Yeah, like one of those dog shock collars and the fake fence.
That's exactly right. So I think I've found that. I mean, I see that every day when, if I hang out with them, that they've always got that thing and they're always just glancing down at it. And it seems just slightly less rude. then people are always looking at their phones.
You need built-in wireless, or do you have your iPhone still in the purse or your pocket, so it's going to have the same functionality? I mean,
well, I think for the guy, it would be best to not even have the phone. You can just have your phone in your car. I hate that bulky phone in my pocket, so I always have it on the table, and it just looks rude. Maybe it's just our generation that it looks rude to, because, once we're past us.
I just keep my phone in my fanny pack.
Jeez, I can't even talk to you when you talk like that. Fanny pack.
What's wrong with having a fanny pack?
You know exactly what's wrong with having a fanny pack. It's called fanny, first of all. It uses the word fanny. That's the first thing that's wrong with it.
Well, I keep my Velcro wallet and my phone in my fanny pack.
Dear God. I'm surprised you don't keep it attached to your belt clip.
Oh, I didn't think of that.
If anyone listens to us, where's a belt clip? Stop it. Just stop it.
I'm going to have to order one. I wonder if Amazon sells belt clips.
I think they give them away.
I'm surprised you didn't bring up the fact that Mike's fanny pack, he bedazzled it. I'm surprised you missed that, Bob. I mean, all the sequins alone.
I am not very good with my bedazzler.
Spells out.
I have done a jean jacket, though, with...
True Confessions with Mike Arnold.
I've bedazzled my 1980. I put Top Gun, on my jean jacket.
Come on, you did not.
Do you think I own a jean jacket?
I think you used to. I'm positive you used to.
Well, I was trying to think of I need a smart tie-in with Disney now.
Disney made a lot of movies in the 80s that featured kids in jean jackets, didn't they?
Like what?
I don't know. Those are all John Hughes movies. Disney didn't make those, did they?
No.
No, they were making movies like Tron and The Black Hole, starring Ernest Borgnine.
Ernest Borgnine looks like a jean jacket. He just visually looks like one.
That makes no sense.
Look at his face. Look
How
at
can
his
somebody
face.
look like a jean jacket?
Look at his face. I'll make an image for you.
Disney released its second quarter earnings revenue coming in at a miss at $14.24 billion versus expectations of $14.42. Earnings per share beat 1.58 versus expectations of 1.55. And they announced they're pulling all their content from Netflix.
Yeah, this is more of a Netflix piece of news than a Disney one, wasn't it?
Well, it's also Disney's going to have their own. They announced that it has agreed to acquire majority ownership in BAM Tech. I can't stand that name, BAM Tech. It's like if Fred Flintstone had a tech company, BAM Tech. They are going to launch its ESPN branded multi-sport video streaming service in early 2018, followed by a new Disney branded direct-to-consumer streaming service in 2019. They will end their distribution agreement with Netflix for subscription streaming of new releases beginning with the 2019 calendar year theatrical slate. So they are having their own streaming service. I think we're getting too many streaming services at this point. It's actually getting easier just to go back to cable. Because by the time you get all the different streaming services and then try to figure out where to watch something, it's getting overdone at this point. Stop. Can we just have like 4 or something? Does every company have to have their own streaming service now? But Disney, pretty decent gap down below prior support at that 103 level, gap down to 171, now trading 101.33. Still expecting Disney to probably go a bit lower on that. What did it do to Netflix, though? One of our FANG stocks, that did trade down to its 50-day exponential moving average and really near its critical support level is about 166. Right now it's trading 171. But that's trying to fill its gap, and if it fills its gap, it would trade down to about 163 eventually. I'm not rushing out to buy Netflix.
Yeah, that's a bad sign. It's interesting as well from a use perspective because, I cutted cord. I don't know, however you would say that. And I have got an entire subset of apps on my phone now of Showtime, HBO, all these different ones that I look at. And adding Disney wouldn't be, I wouldn't care. It wouldn't bother me at all to say, because now I want to watch the Marvel stuff. And, that's really the big piece for Netflix, is the Marvel stuff from Disney. So if I wanted to watch those, it would be very simple to say, it's Disney that has all the Marvel stuff. Okay, adding Disney, no problem.
Well, it depends on the cost, doesn't it?
Not so much, to be honest, because I would just cut somebody else out. Like, for example, I got Showtime simply for Ray Donovan, or nothing else. I love the show.
Simply for what?
Ray Donovan. It's my favorite show.
What is
on TV? It's a show.
Give me something about the show.
It's about a guy from Boston, and really a family from Boston, Ray Donovan and his brothers and his wife, who move out to Los Angeles. Ray Donovan becomes sort of a Hollywood fixer. So anytime there's like a problem, the big studios and big attorneys call him, and he pays people off, and he kills people and beats them up and threatens them and stuff like that. So it's kind of like a Sopranos light. Yeah, it's one of those Tony Soprano type protagonists that you love. Would he be a protagonist? No, he'd be the protagonist, right? He's one of those guys where he's not in this particular guy. There's no actual mob. It's just him and a couple of associates. But he's one of those where he's like such a bad guy, but you end up loving him. It's that kind of thing, just like Tony Soprano. But anyway, it's a great show. It's the only reason I have the Showtime app. And to be honest, I got the 30-day free trial to watch all the old shows real quick and decided if I wanted to continue on with the season or not. So I got the 30-day free trial. I binge watched the first 3 seasons again, and I said, "Yep, I'm paying the $11." So yeah, at some point, I don't want it to get to match my old cable bill, but I would just cut things out. Like I don't use the Bravo app. It's free anyway, but I don't use it. I would just X that out. If they tried to charge me $5 for that, it would be gone. Bravo, of course, has commercials.
So you're just gonna. So you have a streaming budget, and that
in mind, yes.
So if
and also,
now, are you going to
look
keep
at it like this? When the Ray Donovan season is over, I could cancel it and save the $11, and then don't have to worry about like the cable box going out. The whole thing. It's much more convenient. You just cancel the service, and when you hear the show starting again, you start it up, or you wait until the season is over, pay for it for a month, binge watch the new season, then cancel it again.
We're going to see an interesting ecosystem occur because CBS has their new streaming service that they're launching. Mm-hmm. And they're going to put the new piece of garbage, new Star Trek show on that's going to come out, and we're all going to not like it. And their new streaming service is going to fail. I'm predicting that. Mm-hmm. And Fox, with their new parody Star Trek show, is going to succeed greatly. The new McFarlane Fox show. Do well.
What's that called? Do you know?
The Orville.
See, that's interesting. Like, I watch Family Guy on Hulu, and I pay for Hulu. But I pay for Hulu mostly for old Seinfeld, because they've got every Seinfeld episode on there. And sometimes when I want something brainless, I've seen every Seinfeld. So I'll watch, 3 or 4 Seinfelds in a row till I fall asleep. But like if they start doing the on-demand on the apps, where it's just like you just have to watch commercials, I'll delete Hulu as well. It's not good for those services because the content, like the original Netflix content, the original Hulu content, which I haven't heard a lot about. Like there's shows, but I haven't really watched anything. But shows like Patriot on Amazon and Fargo, I think, is on Netflix. Fargo, I've been hearing a lot about. I haven't seen it. The original content now becomes critical. And back to Mike's point about the Netflix stock, that content's expensive. So if they begin to rely more and more on their original content because their purchase content, which is cheaper, is going out the door, the stock's, its value is not correct.
Gotcha. Well, you brought up Amazon.
I did.
Speaking of the chart on Amazon, Amazon's now pulled back to its bottom of the rotation zone on the weekly basis. So you said it's high 2 weeks ago, 1083.31. Now it's trading 961.18. What percentage pullback is that, Bob?
What was that?
1083.31.
What?
Where do you keep your calculator?
It's just right here. It's just big.
1083.31.
Yeah.
Now we're trading 960. Just call it 960.
That is a pullback of 11.3%.
Wow. And
That's good. Wow. That's correction territory.
That is correction territory. If we do break that rotation zone, I talked about that a couple weeks ago, where we could see a return to its 50-week moving average, which right now is 875, which is going to keep rising. But somewhere, if we don't hold here, we could pull back another 90 points potentially in Amazon.
That's crazy that, like, you look at the monthly chart of Amazon, it looks like it hasn't moved at all, right? It's nowhere near even its 21-month average, but it's firmly in the rotation zone on the weekly. And the 50-day, that's another what? It's another 10% down almost, right?
50-week.
The 50-week, I'm sorry, that's almost another 10% down.
Yep.
But the fact that it broke through the 50-day, which is what so many of these guys watch because they pretend that's like the most important charting point. It's an important one. It's not the most important one. And then you look at the Netflix chart, right? Which we were just referring to. Netflix, I have Netflix on its 50-day, like literally on it. Excuse me. Sorry. Should have hit my cough button. So it almost looks to me like Netflix is a scalp up to about 175. And then we probably have a rotation zone cross at that point, and then you're out. You dump. But Amazon, needs to find support. Amazon's different.
What's interesting also, if you look at it on a daily, the 200-day simple moving average, which is a real big one, on Amazon comes in at 880. And what did I say for the weekly? The 50-week exponential is 874. So so there's
your buy zone.
Huh?
There's your buy and hold zone.
Yeah, that's if you're looking for. If we do get down there, that could be the time to get your. If you want to accumulate more Amazon, could be a very good area.
You could start accumulating now, right? Because of the R zone. I mean, you could start. Just wouldn't want it to be your whole position. If you're like I have, X amount to invest in Amazon, you don't want to do all of it here.
No, I would not do. Well, it depends on how much. If you took some off when it ran up above 1,000, and you have some, you could dip your toe in here, and then on the bigger drop, then I'd be very patient. Should we break below really this 950 area, I'd be really patient. Back down and start seeing as it approaches those key areas.
I'd watch the overall market too, because like yesterday, the S&P closed below its 50-day moving average. Now, it's done that 4 times this year. So it's not the first time we've seen this on the S&P, and it's rallied each time. But there is the potential for this time to be different. There's always that potential. I should say this is the 4th time we've closed below the 50-day. But we also reached, well, that's not going to matter to most people listening, but there's always the option that it's different this time. And this right now, we tested it today, and it's a Friday, so I wouldn't expect it to necessarily go screaming above it. But we need to get back above that 50 on the S&P. Otherwise, that correction could come. And I doubt with the weekend happening that's going to happen, because there's going to be more North Korea talk, and that's going to dominate the weekend headlines. And so I wouldn't expect anyone to step in and say, okay, now is the time to buy this thing. You're better buying this on the way back up.
Yeah. Speaking of things I refuse to buy.
Oh, we're on Tesla?
No.
Okay.
Well, I refuse to buy that too, but Blue Apron released earnings. Q2 loss of 47 cents versus expectations of a loss of 30 cents. So revenue came in at 2.31 million versus 2.3 expected. Stock popped about 9%, but then people started looking in and saw that they're reducing their advertising budget, and they lost some customer base. Where was that? That's what people did not like. And then it traded down. Today it's trading at $5 right now. So they've officially cut their IPO price in half in under 2 months. This would be like catching a falling knife.
With warnings of Amazon is coming. Amazon is coming.
UGLY, you ain't got no alibi, you ugly. Blue Apron, you ugly. That's an ugly stock.
Yeah, this is not one I'd be dipping my toe in. We've talked about that. Another one, release. We have IPO week of what is it? Snap.
Yeah.
Snapchat released its second quarter revenue, $181.7 million versus expectations of $185.8 million. Q2 earnings per share loss of 16 cents versus expectations of 15 cents. Second quarter daily active users 1.73 million versus expectations of 1.75, so they missed with active users. The revenue per user coming in at 1.97, 10% below estimates. And their second quarter free cash flow fell by $228.9 million. Their revenue did grow by 153%, but their losses grew by 282%. So, they grew revenue, but they really grew their losses. And that traded down this morning to a low of 1181, leaving behind a nice big gap. But then Goldman came out. Weren't they one of the people who helped with the IPO?
Yes.
Snap reiterated a buy at Goldman. Price target reduced to 23. I'm sorry. Really, that's your price target? Wow. That would be... Snap will do these rally. It does rally back into the declining rotation zone, and there's no way I'm at all interested in this, especially with these numbers.
Yeah, but you haven't been... you've called Snap from day one. You've said this isn't just not something you touch. This is not Facebook that had a sloppy IPO but had a business. You said that a long time ago.
Yeah.
What about Shake Shack? I'm jumping the gun now, but I was looking at the Shake Shack chart, and we're doing that whole thing again where we're just sort of have an extended rotation zone, and it just keeps rallying up to the 8, and the 8 keeps pushing it down. There's no chance of a buy signal on that in the near week, right? It just doesn't look like it to me.
No. This one I did an early entry in. It hit the stop. It's now back at the bottom of its horizontal channel.
Yeah,
and it's got to put in some kind of base, at least on the daily, before I'm interested, because it's now. If it does rally, we have major resistance coming in right about this 34 level. Right now, it's trading 32. So there's nothing I'm interested in, even from a. There's a lot better trading out there than trying to chase Shake Shack.
Yeah, and they ever so slightly beat on their earnings 2 cents versus an estimation of 1.7 cents or 17 cents, or rather 20 cents. I'm sorry.
20 cents. I was going to say 20 cents for 17 cents. Here was their estimate. This is my favorite. Their estimate was 17.1318 cents.
Yeah.
Call it 17 cents, please.
They just wanted a beat. They wanted a beat by a little bit more. They didn't want to round up, which would have been the fair thing. I'm really
worried about that 0.1318 of a cent.
I wish that food stocks would discount stuff when their earnings are bad. You're like, hey, Shake Shack didn't do well. I'm going to go buy a burger. It should be cheaper today. But no, it's the stock.
It's the stock. Oh boy! I just see you brought up Shake Shack.
I did.
I just wanted to see where we stand with our Chipotle Death Watch, because we did close below the 350 mark a couple weeks ago. I think I talked about that on the podcast. We rallied back up to test support becoming resistance, and now we've turned back lower. Right now we're down to 326. My next target, we talked about, I know we talked about this in the podcast because I have it on my chart, at 302.25.
Wow.
So this is another one.
Day. You want to laugh? I ate there the other day and did not enjoy it.
What?
I was like, God, I'm kind of getting bored with this food. Essentially, almost everything Chipotle makes tastes the same. Now, all of that is good. I mean, all of it tastes good, but it kind of tastes the same. It's not like going somewhere else where, like, if you have a Wendy's double or you have a Wendy's chicken sandwich, they taste different. I don't know. Pretty much everything tastes the same. I think it's like the consumer's fault because we get the same things. It's like, I like the mild salsa. I like guacamole. You start getting these toppings on, you put the same toppings on the same meats, it just doesn't taste that much different.
Well, there we go. Oh, hey, we have something going to zero and fraud corner this week.
Love those two.
Wells Fargo. Have you been following this? We haven't talked about this the last couple weeks, but it's not going away. Mm-hmm. Remember that they had the New York Times reported that 800,000 people who took out car loan from Wells were also charged for auto insurance that they did not need?
Come on, really?
Yeah, you have not been following the story?
No, not at all.
Oh, this is huge. So they get
that is huge.
They got a bank. So Wells just sort of like lumped in auto insurance. Even if the person had auto insurance, they're just like, you're going to pay us for auto insurance too. And people didn't realize it because it's
disgraceful.
Yeah. So now this is the New York City Controller, Scott Stringer, said that what happened at Wells Fargo is an unbelievable, outrageous, full-blown scandal. This is a full-blown scandal again. And yet, quintessential Wells Fargo, this isn't just corporate debacle. It's caused real human harm. It's reflective of a system that Americans feel is rigged against the little guy and sadly symbolic of a culture that puts short-term profits ahead of creating sustainable value for shareholders. Everyday families have suffered tens of millions of hard-earned dollars were stripped from unsuspecting Americans, many of whom are struggling just to get by. In the end, shareholders ultimately suffer the long-term consequences. And this was yesterday, moments ago, Dow Jones reported that Wells Fargo chairman Steven Sanger is likely to step down. Well, there should be a whole gutting at Wells Fargo. There's just one thing after another. With that, all the opening the fake accounts that people didn't realize, and now, I got an auto loan through them, and they're charging me on top of it for insurance, that I didn't need and that I didn't approve of. Wow. Yeah,
there has to be change at the top now.
This is the whole there's never just one cockroach principle.
Yeah, there has to be change at the top now, because now you can't say, and the CEO of Wells Fargo, whose name escapes me right now, Jim Cramer's a big booster of it. Jim Cramer's like, he's great CEO, which, sidebar, I never understand how analysts, and I'll include Cramer in that, although I think it's probably a stretch, how a great CEO, really, when did you ever run a bank? How do you know if he's a great CEO? How do you know if his day-to-day CEO decisions are great? Well, they just do it basically on the stock price and on earnings and all that. And here's a great example of why it's not always that. I mean, if you're a great CEO and your bank is just bereft with fraud, it's just overrun. You need a fraud exterminator, like a cockroach exterminator. You're not a great CEO. Especially, you already had one. So you telling me that there's no internal investigation? Go and find out if there's others. Maybe that's what this news is from. Do we have information as to whether it was an internal investigation that found this or no?
No, I think it was external again. I think it was.
Okay, so he needs to go, whoever he is, because that's it. You get tired of seeing it, and we see it all over the country, not just in markets, where you see, the middle road guy, the middle manager get fired and the CEO stay. He needs to go now. I'm going to find his name so I could say who needs to go, because it escapes me right now. Wells Fargo CEO Timothy Sloan needs to be fired.
And this is, I think, it is beyond him. I think a whole bunch of the top. This is indicative of a corporate culture that, we're just going to tolerate blatant fraudulent practices, and what else is going to be uncovered? we already have a lot of the top management should pretty much be gone, period.
Yeah.
Because
this is awful.
And this is where I'd like to see more when this stuff shakes out at these corporations, whether they're banks or whatever, when it's like what you said, the middle manager, or they hang somebody out to dry, all right, and then nothing really changes in the corporate culture because the people who are truly in charge, they're part of the problem, or they're not to be aware of what's going on. And if you're in charge of a bank and not aware of this kind of stuff, then you shouldn't be running a bank.
I need to be more fair to Tim Sloan. He's only been CEO since October 2016. When he took over for John Stumpf, that's who I'm talking about. John Stumpf resigned in light of the last scandal, but he had a pretty big parachute. So I'm not sure that Timothy Sloan needs to be fired for this, but I sure as heck believe, you like that, Mike? I sure as heck believe that he should have found this. It shouldn't be coming from an external.
And if he doesn't take action with more very senior management and say, guys, I'm cleaning house here, then he's going to become part of the problem.
Yeah.
Speaking of the stock, trading right now at very critical support, and it's 200-week simple moving average. If it does get below the $51 mark, not looking good for Wells Fargo, and this is not something I'd be rushing out to buy. So,
yeah,
stock pattern is very ugly on this, especially if it gets below the $51 mark.
Totally agree.
And you've been goading me all show.
I have.
About Tesla.
I have.
What? I don't know why you're doing that to me.
Go ahead.
You just want me to go on a Tesla rant, but this I don't have a lot of Tesla stuff in this week, but the Chevy Bolt outlasts Tesla's Model S in Consumer Reports range test, and the Chevy Bolt, we like the Chevy Bolt, it somehow beat the EPA's estimates, which is a rare feat. The Bolt is rated for 238 miles of driving by the EPA. The car exceeded that in the Consumer Reports test, squeezing out 12 more miles for a total of 250, which is very rare for an electric car. And they actually did this, they put it up against the Model S 75D. It got 235 miles compared to the EPA estimate of 259. So the Model S missed by 24? Well, the Bolt exceeded, and they weren't doing this on the most ideal driving conditions. They were doing this in real-world driving tests. So that's pretty impressive for the Chevy Bolt, a feather in their cap.
Yeah, it really is.
They finally, I think they did an electric car right.
Seems like it. That car's ugly, but so's the Model 3.
Don't criticize the Model 3. We're going to sell 18 million of them.
I mean, it really is. They're ugly. But I mean, Tesla, again, has that status symbol thing going. So people will be like, for a few extra miles, I'd rather have the status symbol. And I don't think the Bolt is cheap.
The Bolt starts at 37. It's got two models, 37,044.
Yeah, minus the $80 million in subsidy you get. So you end up with $79 million in your pocket in a car.
How did you get?
Just making it up.
And by the way, the Daimler Fuso E-Canter I bet you didn't know this, began production in Europe.
That was good, Mike.
The first global automaker to manufacture an all-electric light-duty truck in series. The truck will feature 6 high-voltage lithium-ion battery packs with 13.8 kilowatts each. The E-Canter, which is I guess that's sort of a European name, can travel about 100 kilometers on a charge and carry 2 to 3 tons. So that's in the...
Just looks like a truck, too.
Huh?
Just looks like a truck, too.
It looks like a truck. Mm-hmm. This is interesting in their self-driving car section, because we can't ignore that with all the companies doing it. We've talked about NVIDIA. What is NVIDIA's stock doing? Because they do a lot of these chips. You have Intel So we have a lot of these tech companies. That's why we have to pay attention to. Big gap down in NVIDIA. Did they do? What did they? Oh, big gap down. We'll talk about that. But you can confuse self-driving cars by altering street signs. It doesn't take much to send autonomous cars crashing into each other.
Wait, what?
So this is a hack. Do you see? You can see it in the show notes. Oh, do you have the show notes over?
Yeah.
You like there's a couple of stop signs at the bottom that people have modified with that reflective tape. The way the self-driving technology looks at the signs, those two, and we'll have to tweet these out. It makes them confuse these stop signs for speed limit signs based off its computer vision stuff. So that by modifying, like putting these fluorescent letters on top of the stop sign, the computer then goes, oh, that's not a stop sign, that's a speed limit sign.
Wow.
So these are something that's going to have to be addressed. They're talking about maybe doing it in contextual and other ways because, all right, this is like I'm going to go buy some reflective tape from the dollar store and go tape up stop signs and really confuse the crap out of self-driving cars and make them crash.
Yeah.
That's not even hacking the systems. That's just making them misinterpret what they're seeing.
Well, I like what you have in here about the research team. Suggest using contextual information.
Yep.
Like why would you have a speed limit sign right on the corner of a 30-mile-an-hour intersection?
Right. I just thought this was fun because I would have never thought of this. But hey, this is why the self-driving it has to mature. But these are kind of things that maybe you didn't think of.
It definitely has to mature. What'll end up happening, years from now, I may not even see it, is you won't have stop signs. You'll just have sensors. Like we won't even know why the car is stopping. There'll just be sensors there that stop it. Because there won't be any human drivers.
Yep. And
there'll be nothing to modify.
NVIDIA stock just gapped down today to its 50-day exponential moving average. And let me see on the weekly chart. This is also not a buy for me yet. It's entering the R zone on the weekly chart. I'm watching on a move lower. I'm targeting about 145 to get interested in NVIDIA again. A lot of these tech stocks, we're getting a major rotation out of tech now.
Yeah, this is you have that. I shouldn't say this. There are some people that like leverage up and buy certain stocks when they dip. The tech dip we're getting now on North Korea. So this is, I'll make my wife something else, and I'll talk about this now since you brought it up. These are the kind of dips you buy, and I still don't believe you leverage up on them, but these are the kind of dips that you slowly buy. You don't buy them all at once because, God forbid, there is a nuclear war. You're going to buy them a lot lower. But this is not the type of conflict that affects global economies too much because it's a rogue state and it's probably the U.S. and maybe South Korea and Japan, maybe not Japan, getting involved. So that will, talking about forget the loss of life. We hate when people die. That all sucks. But when you have the U.S. involved almost unilaterally and the two countries involved, South Korea, you don't want to buy Samsung because it's a South Korean company. But an actual protracted conflict will actually help those economies because their industrial complexes will churn up, especially Japan's. And it's not likely to happen, really. I mean, the odds are against it. So these are the kind of dips, if they continue in through next week, maybe Wednesday or Thursday, you start looking to sort of accumulate things that you've been wanting to buy lower. Again, I mean, why should Apple be lower on this? Why should, whatever, pick your poison. Why should they be lower on North Korea? There's not much that should be. And you're still getting a little bit of a bid from the defense sector, so it should probably be even lower than this but the defense sector is kind of helping to prop it up a little bit. So these are the kind of dips you look to buy, not just every dip that happens.
Oh, and I look to buy them at strategic locations.
Yeah, of course. I mean, I should always preface it with that, but yeah.
Well, back to our tech coverage. Intel trading at a very critical level. If we do get a close below 36 on Intel, I'm watching for a possible pullback to, and Intel doesn't move that big, but I'm watching for a possible pullback to the mid 35 levels where we have a very key set of moving averages. But Intel also plans a test fleet of 100 self-driving cars. So we talked about it bought Mobileye, and now they're actually deploying. They're going to build this fleet of 100 more self-driving cars with the Mobileye sensors and mapping driving technologies. So Mobileye provides the sensors and the mapping and driving technologies with Intel's computing platforms, data center, tech, and 5G wireless to make level 4 autonomous cars, which do all the driving themselves but may ask for at some point human intervention. And they talk to the cloud. Everybody's in self-driving mode now. And now our final tie-in. Tesla raising $1.5 billion in debt to boost their balance sheet. And how much does $1.5 billion in debt cover, Bob? How long? Will that cover their cash?
1 quarter. It is a quarter of cash burn. And they were oversubscribed. I mean, there's more people expressing interest, so they basically oversubscribed.
We're recording this on Friday. They're supposed to actually release the coupon rate at some point today.
Today, right?
Yeah, we're gonna see.
So we don't know that they're technically oversubscribed, but the street is starting to say that they are. That there's more people wanting to buy the debt than you would rather buy the debt. So some of these, and we talked about this a little, privately, Mike, is that some of these, I would consider Tesla to be junk debt, but best case scenario, it's high yield, and the high yield debt is priced near treasuries in some cases.
Well, I think they're going to come out at 5%.
Yeah, which is about twice the 10-year note. So you think it's half as likely that you'll get your money back from Tesla than you would the U.S. government. I think it's much, much less than, or much, much more than that. I mean, it's just silly. I would demand 7 to 10% from Tesla.
Well, and it's a private debt offering. There's a lot of speculation about why they're doing, instead of an equity offering, they're doing a private debt offering because they don't have to actually release that much information about what's a bunch of the internal numbers and about all their other stuff that would be required if they were going to issue another equity money. So there's a lot of speculation about why they went to the debt route instead of the equity, and why they're only going with $1.5 billion when that's 1 quarter cash burn.
Yeah, I mean, if they've got the buyers, just raise it.
Let's go for $3 billion.
Just raise it.
Yeah. So that's our Tesla update, but we're still watching these double bottom pattern play out with an eventual first target being, I got to do it officially, the official first target 380.78.
Yeah.
But it's already reduced to stop. So that's our little. See, not much I've talked about Tesla. I've been very good this week.
Take a look at the Oracle stock when you have a second.
That was going to be in my.
Okay, that's your what? All right, yeah. Leave it alone. Leave it alone.
Now we have a cryptocurrency section, which if people are interested in cryptocurrencies and Bitcoin and Litecoin and Ethereum and Neo, Mr. Smith, very interested in Neo.
Monero, Ripple.
Monero, which is one I'm very interested in. They should check out our YouTube channel on that. We do multiple updates throughout the week on different of these coins, trying to help people to learn traditional trading techniques and apply them to the cryptocurrencies. But Ether, Litecoin, and more, Overstock, the company, Overstock now accepts cryptocurrencies as payment. Overstock has partnered with blockchain startup Shapeshift to accept more than 60 cryptocurrencies as payment for its online stores.
Wow.
So they were first to embrace Bitcoin as payment method back in 2014, but now they're expanding to 60 different cryptocurrencies.
Wow.
Overstock's CEO Patrick Byrne, he's a fascinating guy. His quote this week was, "Overstock is a pro-freedom, including the freedom of individuals to communicate information about value and scarcity without relying on a medium created through the fiat of unaccountable government mandarins."
What?
I don't know what the Mandarin thing, but it's like, all right, you don't have to use your fiat cash because our government's debasing it, so we're going to accept cryptocurrencies across the board. Cryptos for all. He's a big libertarian, by the way, so Overstock's putting their proverbial, I can't say money where their mouth is, I'd have to say their, like, Bitcoin where their mouth is, or their cryptocurrency.
That's great.
That is. I'm going to have to do a little more shopping at Overstock with some of these cryptos. And really heating up in the crypto space, CBOE, Chicago Board Options Exchange, plans to launch Bitcoin futures, announces agreement with the Winklevoss Brothers Digital Currency Exchange. CBO Holdings and Gemini Trust announced an agreement on Tuesday for a subsidiary of CBOE and its affiliates to use Gemini's Bitcoin market data to create Bitcoin trading products. CBOE plans to offer cash-settled Bitcoin futures as early as the fourth quarter of 2017, pending regulatory review.
What cash are they settled in? It's interesting to offer a cash-settled product on a cash product.
Yeah, we'll see.
I mean, on a currency product, rather.
Let's see. CBOE Futures Exchange plans to offer cash-settled Bitcoin futures in the fourth quarter or sometime early in 2018. The CFTC told CNBC in a statement that, to quote, "To date, the commission has not received a filing for Bitcoin futures contract from the CFE." Let's see if there's any more information. Who said this? John Dieters, Chief Strategy Officer of the CBOE parent CBOE Holdings, told CNBC in a phone interview, quote, "We've really come to the conclusion recently that cryptocurrencies are here to stay." So they're not going anywhere, Bob. That's why we're covering them.
Totally agreed.
But that's gonna. So the Winklevoss stuff didn't get their ETF through yet, but this will probably, the ETF's going to definitely come now. I will guarantee it will come because it's the stock exchanges aren't going to want to get left out of this. Do you agree?
Yeah, I mean, so it's funny because obviously it's going to be settled in U.S. dollars, right? A cash settled market. It's going to be Bitcoin versus U.S. dollar or whatever other crypto products they come up with. Just on that note, just like so that's why every euro future at the CME group, every currency future at the CME group, some of them are backwards. Like in the cash markets, you trade the dollar yen, but in the futures, you trade the yen to the dollar so that it can be cash settled in dollars. So that's the first thing. So when you look at like CME Group yen futures, it's reverse of the dollar yen in terms of what the pricing is. But yeah, I mean, I'm going to put myself in this now. We've thought they're here to stay. Our cryptocurrency segment, I used to mute. Now I listen and participate where I can. I'm definitely a novice, but I'm a huge believer in these things as a real tradable product. I did a CNBC this week, right, where we talked about Bitcoin versus gold. And some of these people are trying to say that it's a flight to quality. I get that because Bitcoin isn't controlled by a government. So I get why somebody would say it was a flight to quality. But I don't believe quality should be in there because we don't know if Bitcoin is going to be the cryptocurrency or one of the cryptocurrency that sticks around. I said this on TV, and this is probably too strong of a statement, but Bitcoin could be MySpace, and there could be a Facebook coming in Bitcoin's future. We don't know. So I think flight to quality is a stretch. But if you want to fly away from governments, you're talking gold or cryptos, whichever crypto you like. So I get it from that. So I think it's more the anti-fiat than it is a flight to quality. And then the next thing is when they were comparing it to gold, my comment was comparing Bitcoin to gold is like comparing cinnamon to oregano because they're both spices. You wouldn't replace a recipe that called for oregano with cinnamon if you had it. And I wouldn't replace holdings of gold with Bitcoin or vice versa. I wouldn't replace holdings of Bitcoin with gold. Gold has a physical use, and there's a demand that's always going to be based on that. People look at gold as a currency, but at the end of the day, it has a physical use. In places like India, for example, gold is still the ultimate. There's a huge push of demand for gold out of India around wedding season, which just ended. It's like June, July in India. And there's a huge demand for gold out of India, physical gold at that point. But they are similar in that they're mined, and there's limited quantities of it, and their value's based on scarcity. So yeah, they're not going anywhere. I just don't think we know which ones are going to be around. I'm sure there's going to be more than one. I think it's funny that the New York Stock Exchange, like Mike said, will want to get in on it. CBOE is pretty aggressive with this kind of stuff. I mean, they're the world's leading options exchange. I'm surprised they were the first ones to get in, because what some of the guys I talk to are looking for is options on those things. Now, Mike, would you know if that's what they would be trying to do, or would they be doing more of a futures product? Or we just don't know yet. The futures stuff, that surprises me.
They're going the futures route first.
That surprises me.
But once you do the futures, if you're going to do the options, it's got to be traded against something. So they're going the futures route. Then I guess they could roll out options like immediately after that got approved.
Right. I mean, but what's the VIX change traded against? The VIX options, the VIX index, right?
Yeah.
So you could theoretically, because you could hedge your you could hedge your Bitcoin options with Bitcoin.
Yeah. But since there's so many different exchanges, and the Bitcoin trades different prices on different exchanges, and I think they're trying to have a uniform where they're going to, that's why they're partnering with the Winklevoss stuff, and we're going to use that to be able to mark that's our official market, and that's what we're going to mark to market with one source every day. And then once we have that, we can then mark all the options to market every day using the futures price. Mm-hmm. Because it will be options against the futures. So I can see why they're doing it this way. Because, I mean, we could trade Bitcoin. I track it on a bunch of different exchanges, and there are arbitrage opportunities.
Yeah.
At times, and there's actually different chart patterns slightly depending on what exchange you're looking at your various cryptos on.
Yeah.
So I think they're trying to make it uniform.
It's great.
So that pretty much wraps up everything I had this week in cryptocurrencies. And then we have to get to the U.S. economy segment. We had Bullard again talking. See September chart for the balance sheet unwind. He finds it hard to find an explanation for U.S. low inflation data. He's not optimistic on inflation gains this year. And he also says no recession on horizon today, but, quote, you never know.
You never know.
And then he also said, Bullard says Fed has been reluctant to target equity prices. Huh?
They comment on them.
They've been reluctant to, they're supposed to target equity prices?
I mean, they comment on them just fine.
Yeah, I didn't think they were supposed to target equity prices.
Again, those are those headlines that are kind of taken out of context.
Yeah.
Somebody may have asked him a question. Somebody may have said, why don't you guys target equity prices? If equities go up, why don't you raise rates, instead of this inflation that doesn't seem to be turning up? It could have just been a question that was fed to him. And then somebody puts it out like that, and we have to interpret it.
And Kashikari, quote, if there's a future crisis and we really need people to believe in us, we've earned and established that credibility. So
I don't know how you say that when things haven't played out yet.
Well, he believes they've earned it.
Whatever.
And he also said, I quote, I would like to see higher wage growth for workers' sake, for town's sake, and for the Fed's sake. And Dudley does also not expect inflation to get back to 2% in the medium term. So that's all the Fed speak for this week. Non-farm productivity came in a little better than expected. 0.9% expected, 0.7%.
That was a good sign for GDP, the productivity number.
Yep. Labor costs expected 0.6%, or came in at 0.6% versus expectations of 1.2%. So there's your labor costs missing big. Wholesale inventories slightly higher by 0.1% than expectations, coming in 0.7 versus 0.6. Wholesale sales coming in at 0.7 versus expectations of 0.1%. Producer price index for the final goods unexpectedly declined in July. The PPI fell 0.1%, as did the core PPI. The economy census expected a 0.1% gain, so it came in at minus 0.1%. CPI also missed 1.7 versus expectations of 1.8. Core CPI came in at 0.1% versus expectations of 0.2. So your inflation stuff missed again. Now, tying in what you said, Goldman raised their third quarter GDP from 2.4 to 2.5 due to a more front-loaded pace of inventory investment, and our favorite GDP now model by the Atlanta Fed for real GDP growth in the third quarter of 2017 is at 3.5%.
Yeah, so the producer price index numbers are good for stock prices, obviously. Those just more profits. The Goldman thing, I don't care about that. I mean, obviously, the inventory number came out and it was higher. So there you go. They got to ramp up their GDP. The GDP now model forecast shocked me when I saw that they're up above 3%. But at the end of the day, the biggest thing to me is the Fed is going to latch on to CPI being up from last month. Not that it missed based on expectations. They're not going to latch on to that. They're going to latch on to last month it was 1.6 and now it's 1.7. And by the way, we're talking about the year-over-year figure and only the year-over-year figure because that's all that matters. Some good news the Fed can take out of CPI was services prices were up 2.5%. And we're a service economy now. So that could start to bleed in. The thing I find just kind of ridiculous is that the Fed chair blamed it on transitory things like cell phone prices last month's, or the recent dip, I should say. Blamed the recent dip in prices on transitory factors like cell phone plans and reduced costs of prescription drugs. I hope, first of all, reduced cost of prescription drugs is not temporary or transitory. And then, really, cell phone plans?
Yeah, I saw that. I was like, what?
It was like, how big of a portion of the basket of products is cell phone plans? I guess it should be big. Everybody has one. I don't know.
Yeah,
but shouldn't we be
GDP? You're talking, I mean, inflation in the whole country.
Well, everyone in the country has a cell phone plan. I mean, CPI is based on a basket of goods purchased by households.
Versus healthcare costs. I mean, that's a bigger driver than.
Well, we don't know what I could look at it for next podcast, but we don't know what percentage of each thing it is, right? I mean, you would think healthcare would be a larger percentage of the household budget than cell phone plans would. But if you have 5 kids and you get your healthcare from your company, it's not. So, these are households, remember. They're not just like flat costs. They're not just what something costs. It's households, what they're actually paying. So there are scenarios, and there's probably quite a few of them that we don't fully understand when you look at the number. But at the end of the day, the services thing is a good thing for the Fed to latch onto, but the rest of it just isn't. And I think the only way we see inflation now is if the dollar continues to go lower. And that would be good for the Fed, because then we can import inflation. For those of you that don't know, when the dollar goes lower, the things that we bring into this country, which is a full 60% of the goods that are purchased here, are from overseas. So if the dollar's weaker, those things become more expensive. That's how we're going to see inflation pick up and the dollar weaken, and then the Fed can fix two problems in one blow. But I really think that's what they're counting on. I think they're counting on a continued weaker dollar. I should probably look at where it is while I'm talking about this. But the dollar index is what you should be watching, in my opinion, to see if there's going to be inflation coming in the pipeline. We should have had a little bit of kick from it already because the dollar's been going down since, mid-January maybe, Mike? February? Late February, I'd say. And so we should have had a little bit of a kick of it already, and maybe that's what that 1.6 to 1.7 is. It's down right now, 0.14%, so not even 0.25%. But if the dollar continues to weaken, we can import inflation. But other than that, man, discount economy, I don't know. Why are those factors temporary? Does she think all of a sudden the cell phone companies are going to stop trying to undercut each other? I think the opposite.
Well, there you go.
There you have it.
There you have it. And by the way, currency international markets, Swiss National Bank's U.S. stock portfolio hit a record $84.3 billion in June. Look at their holdings, though. That's interesting. If they actually have to unwind a bunch, look at their top holdings. They bought into the FANG stuff. Apple,
yeah, they sure did.
Alphabet, Microsoft, Amazon, Johnson & Johnson, and Facebook. So out of their top 6, they've pretty much got the FANGs covered.
Look at that.
They're not a fan of Netflix or Tesla, though.
People still buy Philip Morris, huh?
Yep. Then they got Coca-Cola, they got General Electric, AT&T, so they got some dividend ones in there.
Coca-Cola was doing well, if I remember correctly, last time I looked at the stock.
Was it?
I believe so. What's the symbol?
It's not KO.
KO.
Came down to its daily rotation zone, rotated back up rather nicely.
Yeah, it had rallied quite a bit in late July. I think that's the last time I looked at it. Swiss National Bank doing good.
Yeah, Swiss National Bank, as long as we don't have a major tech sell-off.
Could have been our third index if we were actually keeping track of those indexes. We could also have the Swiss National Bank index. Coca-Cola looks like a short-term buy to me. You draw a best fit line on the daily?
Yep.
Shop talk.
Shop talk? We can't have shop talk on our podcast.
Mm.
And how about your motherland?
Oh, here we go. I've been waiting for this one.
What do you mean? What have you been waiting for? The fact that Italian junk bonds yield less than U.S. Treasuries at this point?
I'm very positive on your opinion on this. I totally agree with you. So I've been kind of waiting for this.
Really?
Mm.
I mean, that's just hysterical to me. I don't even know what to say about this one. Why would you buy Italian junk bonds versus U.S. Treasuries? And this is a no-brainer.
Yeah, I mean, again, we talked about this. Junk bonds yielding, the junk bond index yielding near U.S. 10-year. Are you more likely to get your money from the U.S. government, get your money back? And we're talking about return of capital, not just return on capital, because the return on capital is the same, right? So if you had to say who's more likely to give you your money back, the U.S. government or some of these companies in the junk bond index, I mean, it's just, that to me is signs of the apocalypse.
Well, when you have what,
you're more likely to get your money back from Italians. I can say that because I'm Italian.
You can say that because you're Italian. So yeah, this search for yield is getting absurd at this point.
Yeah, it really is.
But when you have the ECB buying yield at less than zero, where does all this end?
Yeah, it's crazy.
Personally, I'm not going in on Italian junk bonds.
Nope, I'd rather buy treasuries. Why would you?
So, but don't.
Yields are similar.
Who said we have a treasury bubble, though?
What's his name? Greenspan.
Yeah, he said we have a treasury bubble.
Alan Greenspan says we are in a treasury bubble. I don't think we are.
I don't either.
Don't think we are.
I don't either. He said stocks are okay, but we're in a treasury bubble. I'd probably flip that on its head if I had my druthers.
Druthers.
I can have my druthers every once in a while. So I'm just looking at the 10-year note back to, we actually had to stop reduction for this double bottom that's been playing out for weeks. We traded up to the 37.5% gain level again today on that. So still unfolding there. But what you now have to switch up your why.
Yeah, because I said it, didn't I?
Yeah, you.
I what? You just cut out.
Today's edition of The What and the Why is brought to you by Motive Wave Software. Motive Wave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. Motive Wave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gann, and ratio analysis, but it's presented in a very easy-to-use way. Motive Wave has a product to fit any budget and any trading style, and one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com.
Premature wide.
Oh, I prematurely wide. But let me just play off of what my why was going to be inflation and why there is none and where they're seeing signs of it. And so I'll just continue to play off of that whole theme of that we have to import inflation. And I think that's where most price fluctuation is going to come from going forward, because most of the pressures in economies in general, the price pressures are now down. The only place you can see certain fluctuations that are solely based on supply and demand now is crude oil, because technology will still help the price of crude oil to go down, but just not as quickly as ride sharing helped the price of rides to go down, or Amazon helps the price of everything to go down, or Walmart helps prices on Amazon to go down just by cutting prices. And that's the economy we live in right now. So I don't think it's unusual, and I still think the Fed does need to, quote unquote, normalize. But I just don't think it's going to be as aggressive as they would like it to be. And on the one hand, you take what Neil Kashkari said today, and you can kind of extrapolate that and say, where he says, we've earned the credibility, we've established the credibility for people to believe in us, tells you that, and I think this is kind of a theater of the obvious statement, tells you that the Fed intends to manage the economy. They don't intend to go back to what they used to be, which was just price stability. If you actually could get behind closed doors in the Fed, I think you'd actually hear them saying things like, how do we sustain our existence when price stability is happening naturally? As a matter of fact, price deflation is happening naturally, because that's what's happening. And that's what technology is doing. It's just dropping the cost of goods and services through technology. And somebody tell me how that would stop. Not only does it not stop, it just accelerates. So inflation is going to be kind of back to what it was, the original definition of inflation was monetary expansion, not price changes. And the definition has morphed and changed pretty much. When you talk about inflation, people are talking now about the price of things. But the original definition of the word inflation as it goes to economics was the expansion of money supply. And disinflation was the contraction of money supply, the shrinking of money supply. That is no longer the case. And as it refers to prices, I think going forward, inflation is going to be more about money supply relative to other things. So as you see the dollar weaken, which cryptocurrencies are going to be a part of the dollar weakening, albeit a small part going forward, you're going to see inflation get imported, because we're going to continue to have borders and we're going to continue to have trade. Hopefully it's more and more free. But the more free that trade becomes, the more those deflationary or disinflationary prices, headwinds, factors come into play. The freer it is, the more somebody could say, hey, I'd like to sell this to you cheaper. And I think that's kind of where
politics gets involved to try and prevent that kind of stuff. So inflation is not going to come out of us going to the store and seeing that, the price of Tide went up. That's not what it's going to be anymore. It's going to be currency markets. So if you don't understand the currency markets, I don't think you'll understand inflation. That's my why.
I didn't understand any of that.
I know. I'll explain it to you later.
All right. My
Do you have a
stuff's
what?
Simple. Very simple. Massive double top on Oracle.
All right.
Triggered yesterday on a daily basis.
Sell it now or on a rotation up?
It's already rotating back up anywhere back to 48.39 to 48.77. That's good locations to sell. The stop production target 47.23. It's pretty interesting because it's left behind with their earnings back in the beginning of June or middle of June. They left behind a massive gap. The 75% GAN extension target 46.46 essentially fills the gap. And then the full target 45.69 is the prior breakout zone.
Tell me the three targets again. What's the stop reduction?
47.23. 46.46.
Yeah.
First profit taking target. 45.69. Second profit taking target.
Got it.
So those are the key levels for this very interesting double top. And this would be invalidated if Oracle went and closed beyond $50.70 or traded through intraday at 51.09. So I'm wondering what's it's now on its daily basis. This takes it below its 50 EMA on the daily basis. The only drawback to this, it's still trading on the weekly basis, and this is going to trigger also on the weekly basis today, unless we have a massive rally. Now, the bottom of our rotation zone, this is trading against the rotation zone on the weekly basis, which means it could find some support, but the bottom of the rotation zone is exactly dead set at the 50% level for where our stop reduction is.
I love that trade.
You love it?
Yeah. It's just a really nice pattern. You got the gap. You got the breakout zone down below where the 175 is.
You love it. Why don't you marry it?
I know
Really?
you, Robert. What am I? Whoa.